All right, everybody, it's me, Gregory Mannarino. It is Wednesday, May 29th, 2019. This is my post-market wrap-up. I'm going to cover a lot of things here, so sit down and get comfortable for a moment here. So here's the deal. Stocks finished lower across the board, however, well off of the intraday low. Dow Jones Industrial Average peeled off about 221 points. At the low, the Dow Jones Industrial Average was down 409. Now, if you follow my work, you've heard me say that this market is going to continue higher in this environment until it doesn't. Now, I am not saying that we've hit a top here. That's the truth. I know a lot of people writing to me today, Greg, this is it, it's the market top, it's all over. You might be right. But we need to pay attention to a phenomenon that is occurring right now. We're seeing a literal collision occur between two opposing forces in this market. Now, no secret, the artificial suppression of interest rates have caused stocks to vault higher since the Federal Reserve stepped in here at Dow 6,000. Remember, the Dow Jones Industrial Average during the last meltdown was cut literally in half. Dow 12,000 became Dow 6,000. The Fed stepped in, started buying bonds, cash injections, do whatever they could to reprop it up. Now, we do not know, pay attention to this, where the true bottom of this market is. The market could have went Dow 3,000, Dow 2,000, Dow 1,000. We don't know. We have no idea, because that's when the Federal Reserve stepped in, started buying everything in sight. Every single world central bank synchronized and has been doing the same thing right up until now. I have said for years, maybe a decade almost, that at one point this was going to, the cure was going to become poison for this market. Now, again, we are seeing two opposing forces here interact. Now, let me put an analogy on that for you. There is a term in aerodynamics called a Coffin Corner. In another life, I used to fly planes. That's the truth. Nothing fancy, not like an F-14 Tomcat. I used to fly Cessna 172s. Loved it. Loved flying. Now, this aerodynamic term, Coffin Corner, what is Greg talking about? Again, this is a reference to two opposing forces. Most of us are familiar of an aircraft stall speed, and most of us equate it to when an aircraft moves too slow, it kind of drops out of the sky. Well, Coffin Corner, when this is achieved, is when an aircraft overspeeds and you get a disruption of airflow over the wing, and despite moving very fast, the aircraft stalls. You understand? So what we're seeing here is very interesting. With the action here in the debt market spooking everyone, people are starting to wake up to the fact that our economy is not as strong as we have been fist-fed to the highest order from the highest office in the United States that it is. I mean, we have not had a single round, not one, of good economic news in as far back as I can remember. It's been literally years. But again, it's the propaganda, and this has caused hype in the market. It's the truth. So stocks have vaulted higher by every mechanism you can think about, by real things too. The repatriated cash, no questions asked. Our president said was going to come back here to the United States. He also had said that businesses were going to invest in themselves and hire people. This did not happen, just like I said wouldn't. What did happen is these companies bought back shares of their own stock, boosted up that price, artificially keeping the stock market inflated. So what we have here are two absolutely opposing forces, a massively, and I cannot stress this enough, massively overvalued, overhyped stock market that has been propped up on the back of exploding debts and deficits. That's it. If you look here, bonds, the bond yields continue to drop. Okay, the yield curve's inverted. We all know that. But cash is going into the debt market. That's how it works. Cash goes into the debt market. Rates calm down. Now, again, we're seeing this convergence here, and it's rattling the stock market. Okay, all well and good. This is not the big one. I guess that's what most of you want to hear. This is going to rattle the stock market. We are going to see a lot of volatility here. And again, we've hit that coffin corner here, possibly with regard to the interaction between stocks and bonds. But the big one is going to happen when we get a snap back. When, again, the yield curve is going to continue to invert, in my opinion. And that's going to rattle this market even further. So you're going to get a lot of wild swings, like today. It's going to continue here. And we can see another 5 or 10, 20% peel off the stock market. That does not mean it's the big one at all. The big one is going to occur when bonds sell off in an uncontrolled fashion. And what's going to happen? It's very simple to understand what they are going to attempt to do. Once bonds sell off at one point, again, who in their right mind, what entity would want to hold a bond here, let's say a 10-year, that is yielding less than a 1 month? All right, no one. And it goes beyond that too. If you're holding a long-term debt unit here, you are literally being robbed blind. As a matter of fact, any a government bond, you're being robbed blind. And how? Because they're not even paying what the actual rate of inflation is. It's a losing bet. You literally, if anyone who were to buy a government bond here is literally flushing cash down the toilet. There's going to be a moment when this is not going to be sustained. It's not sustainable. So we're going to get a sell-off here in the bond market. It's going to be epic. That's going to pound stocks. And where's the true bottom? Nobody knows. Again, Dow 6,000 is where the Fed stepped in. That was not the bottom. It was artificially propped up at Dow 6,000. The real bottom is probably a few thousand points below that. So I'm going to sit here and explain to you that when we do get this massive sell-off in the debt market, it's going to happen. Dow 3,000, Dow 2,000 is possible. We don't know where the bottom is. No one does. No one is smart enough to know that. And you can get every single talking head across the spectrum on these mainstream financial channels. Not one of them is smart enough to know the real price of debt, because it's been artificially suppressed now, yields for over a decade. No one knows what the actual price of a stock should be in this environment. It's not real. It's not real. So I want you to think about these things here. So don't let this over rattle you here. The collision that we are seeing right now between stocks and bonds is going to rattle this stock market as the yield curve continues to flash brighter and brighter and brighter red. Our economy, people, is failing. It is failing. Look at any metric you want to look at, anything real. Forget the U3, because that's what every single politician is, and not just politician. You go listen to these idiots on the financial channels, but the unemployment, it's so low. Again, they're referring to the fake U3 number. They're not talking about the U3. The U6 number is the real number. The U3 is fake. It's the one they use to fish feed you that everything is just fine. But you want to look at what's manufacturing doing. It's falling off of a cliff. Industrial production is falling off of a cliff. Money velocity is going nowhere. We're at historic lows. And I've been explaining this to you for the longest time. The only thing maintaining the illusion is exploding debts and deficits, which can't stop until they do. until they do. And when that happens, when we get a snap back here in the debt market, it's going to rock the core of the earth. Forget about the financial world. I mean, everything is going to come to a stop. We're going to get another credit freeze, and the Federal Reserve, like I tried to say, what they're going to try to do is buy the debt, all of it. So imagine, debt market starts to sell off rapidly, bonds selling off. So the Fed's going to try to stop the bleeding by doing what? Adding digits to a screen, or printing cash out of thin air to buy the debt. What is that going to do to the dollar? It will destroy it. At the same time, the money velocity will start to kick higher. Because again, massive amounts of cash leaving the debt market, massive amounts of cash leaving the stock market. So you end up in a hyperinflationary event, pandemonium in the streets, outside your house. We're not there yet, okay? But this interaction now, these between two opposing forces like the Coffin Corner and aerodynamics, is going to wreak havoc on this market here. There's no doubt about it. We all knew this moment was coming. I'm not saying this is a top. It may not be a top. Let me explain this to you again. I don't know whether President Trump is calling this a spat anymore, because it was a war, then it was a spat, then it was a war, now it's a spat. I don't know what he's calling it. China believes it's a trade war, okay? I think it's a trade war. They keep talking about what they're going to do to each other moving forward. It sounds like a war to me. And if we get a solution here, any solution, if we get a really bad deal, the market will respond in a positive way. If this market bleeds off further and President Trump thinks this is going to rattle his chances of getting reelected, because that's his claim to fame, it's the market, nothing else, nothing, zero. Well, he's going to make a deal with China that's not going to be good for the United States at all. And that's, I think, what China is counting on, because they understand that the stock market is President Trump's Achilles heel. You know it, I know it, he knows it, and that's the truth. All right, with that said, I think this video has been important. I think I covered a lot of important things here. If you believe that's true, please share this video, and I could always use a thumbs up. Makes me happy. This guy, not that one. This guy loves you. I don't even know who that guy is. Some people think it's President Trump. He will remain nameless. See you tomorrow.